Good morning, traders. It's Wednesday, January the 18th. Taking a look at the charts, we've got the SP 500 futures here. This is the daily chart. And today we're seeing equities trade slightly higher. Yesterday I did an interview with Jim Godard of the Howie Street Report, and I talked about how traders more or less are they're starting to get a little bit of fear, and the market is trading sideways here. They're starting to worry that it's going to roll over and sell off, and we've been seeing money kind of rotate into the safe haven, and we can also see the fear here. If we take a look at the VIX, it doesn't look like much, but there's a couple big spikes here in the VIX intraday, where the VIX went from the lows to the highs up over 10% each time. So the VIX has been climbing even though the equities market has been trading sideways, showing there's fear in the market. And of course, that has been moving money into the safe havens like bonds. If we take a look at the chart of bonds, we've seen over the last, yesterday really, we saw the fear kick in with a big jump in bonds, bringing us up to short-term resistance. And of course, gold and silver and miners, they all popped up as a safe haven play. So that's kind of where we're at it. On a short-term basis for the equities market, we're getting close to being kind of having a short-term cycle low here. We're down at a support zone for several indexes, especially the IWM. It's trading down kind of in the lower reversal zone. And we talked about this yesterday, that we could see a little bit of a drop here, kind of a shakeout in the equities market, just a little bit, maybe one down day or so, and it could cleanse the market, and we could see probably kind of the market reset for another move higher. Now, let's go and take a look at gold real quick. GLD, we got some interesting price action kind of playing out. You look at the volume back here, heavy distribution selling, lots of big red bars volume-wise. And of course, it's been driving price down. Now, the market tends to move in cycles, and what we're looking at over here, this last cycle here, actually it was a 21-day cycle, and we came right up more or less to a gap fill with the top of this candle here, filling a gap. 20 to 21 days is typical cycle in the markets in general. It doesn't matter what market it is. It seems commodity stocks, they all kind of move with roughly this cycle. And if we actually count from the low over here and go all the way up, this here, and an exhaustion gap to the upside, filling this, let me just quickly draw it in here, filling this gap window. This gap window here is 21 days again. And of course, we're flirting with resistance, gap fill, 21 days to the upside. We're showing short-term cycles and intermediate cycles starting to top out here. So I wouldn't be surprised if this kind of exhaustion gap starts to reverse and sell back down, and we see gold consolidate here or pull back for a week or so as it tries to digest. The question is it going to do what it did last time, kind of try to hold up but then break down and start a new low? Or is it going to find support and build a bull flag or a pennant formation and a launch pad for it to take a run? The next stop is going to be the 200-day moving average, somewhere up here around the 120.89 area. Obviously, in due time, that'll work its way down, but it'll be somewhere around this 120 area in general. So that's kind of where we're at in the grand scheme of things. Now, if we take a look at gold miners, considering gold had a big pop and a move to new high, gold miners really just popped up, making nominal new high over the last week and a half. Typically, we want to see these kind of move higher and outperform the price of gold. So this is an early warning sign as well that gold might be putting in that top there yesterday. Give or take a couple days here, I think it is getting exhausted. Now the other thing is, if we go back and look at the previous cycle, we had a very similar kind of price action here, where if we just take a look at this bar over here, we saw gold come down, popped up, made nominal new high. That's kind of where we're at now. And over here, same type of thing happened. Gold popped, came back down, made a more or less tested those highs, didn't break out and expand like what gold did. And of course, you can see what followed. So overall, a little bit bearish on miners and gold for short term. I think they're a little bit overdone. And the big question is, can gold miners kind of hold support? Probably somewhere down here around the 20-50-day moving average. Work itself down, build up a little bit of strength again, and then take a potential another run? Or is it going to crack and break down and we start to see another major low in gold? So that's kind of where we're at. This pop this kind of late December, January pop, to me, the easy money has kind of been made there. That move is done. And now we're kind of waiting to see if the market reverses and builds a new basing pattern, or if it's going to reverse and a potential short play to the downside. Taking a quick look at energies, let's move over to natural gas. Again, ugly chart. Don't really need to focus on that too much right now, but crude oil continues to kind of roll over here and is moving down. We talked about this, that if it breaks more or less and closes below this level here, then the next target is going to be 48 to 47, somewhere in this window, which is the 200-day moving average, which acted as support first time it hit it, traded around it for a couple of days and reversed with a big move off it. So that'll be the next kind of level, and of course that'll give us more or less a breakdown with a multi-wave correction down here, flushing the market out, getting all the longs off board, and it'll be reloading. We'll probably see some pretty good volatility down here, probably see some type of bottoming formation. And just like over here, there was overall, we saw a bottom, kind of a washout low. It came up with a strong reversal bar, did a tight bull flag, and then closed up again, signaling the start of the next kind of big move. So we'll be looking for some type of reversal pattern and strong price action down here if that happens. Let's just take a quick look over here at some commodities. Here we've got the cotton commodity. Have a resistance line here. We did gap and run and close above it, signaling that we've got a new potential upward move. We've cleared some pretty serious resistance here, a big potential basing formation. It's popped up. It's had a nice little pullback. And overall, I do feel as though it's going to go higher. Now let's just take a quick look at the Fibonacci retracement from here and see where we're at. We're probably down, yeah, we're right down into that 50% mark, depending where you want to go, the highs or the lows, right to the middle of this range. Moving averages are coming in as support. And I think this has got potential to continue to move up. Short-term cycles are both kind of oversold, bottoming out, starting to turn up. Usually these kind of turn up first before price does. So that is overall a bullish sign for the BAL ETF. Another one is the corn here is starting to pop. Yesterday it kind of started to pop and break out of this level. Got some good volume moving in. Obviously you can see short-term cycles a little bit overdone, but if this is a bull market, a new big breakout here, this will just stay in the overbought market condition and it'll keep going up. So overall, it's starting to break out. Yesterday was kind of a confirmed close above the downtrend line. And this could really unwind to the upside going forward. Last but not least, just want to pull up the US dollar ETF here real quick. Obviously, Trump said the US dollar is a little overvalued, and of course, we've had a big drop since then. But overall, the trend remains up. It's had a multi-wave correction to the downside with some pretty strong volatility here. We've had some good volume, which means a lot of people are getting shaken out, and we're probably getting down to a significant low. We're down to a short-term support zone. We still have the main moving averages moving up, the 50-day and the 200-day. The overall trend is up, and now we're just kind of getting into this oversold market condition here. Obviously, this is one of the reasons why we've seen gold really pop in price. The US dollar has fallen. That has really helped lift gold and silver up. But again, US dollar here now getting oversold down at near a support zone here, getting pretty overdone cycle-wise, and a strong bounce here will put that top in gold that we were just looking at with the 21-day cycle and gap fill and kind of doji narrow range candle. That's usually the sign of exhaustion and that gold should move down. And of course, same type of thing here. We got a nice move down, exhaustion gap, narrow range candle, meaning that the momentum is more or less stalled out. Just similar to what over here, narrow range candle, where you get it open and close at roughly the same price. Price went up and then it stalled out, moved down. So that's kind of where we're at here. Now we're oversold and ready for a potential pop in the US dollar index going forward. So overall, that's it for this morning. I hope to get into some positions here and start building up a little portfolio as the equities and commodities start to move for 2017. Talk to you soon. Bye-bye.